Welcome to Wecan Grow Academy. Before watching this video, please go through this disclaimer. The content we create and publish in this channel is only for educational, learning and knowledge purposes. All stock market related strategies, indicators, analysis provided is for studies and to understand the behavior of an investor or trader. Please do not consider this as a financial advice or a buy sell recommendations. We are not SEBI registered. Do your own research or consult with your financial advisor before investing and trading in stock market. Today I am officially launching our Wecan Institutional Footprint Pro indicator. This is not just an indicator, it's a mathematical map that reveals exactly where the big institutions are setting traps and where they plan to exit their massive position. Notice something different here. Our levels have a historical persistence. Most indicators disappear or repaint. Ours stay on your chart until they are tapped. This allows you to verify the accuracy for yourselves looking back at any day in history. The key strategic features of this indicator is what makes this unique is our sigma based volatility logic. At 9:15 a.m. itself, well in advance, the system calculates the daily potential range. It's a daily potential range. It calculates in advance. It identifies the levels from L1 to L10, which act as an intraday GPS. But the money zones are the institutional traps and exits. The institution wallet automatically identifies a precise high probability call put traps and bull bear exits levels. These levels are mathematically derived from opening volatility and stay on your chart until they are tapped, providing a perfect historical record for strategy verification. It has a multi-time frame anchor points, a real-time tracking of your current, previous, weekly, monthly openings. These are all the line on the sand for a long-term trend bias. It has an integrated execution dashboards, a sleek, a non-intrusive heads-up display that provides instant trend analysis across 4 time frames like 1 minute, 3, 5 and 15 minutes, including a real-time AI scan bias which tells you whether to buy put or call. Okay. It has a precision filtering, includes toggleable VWAP and central pivot configurations to confirm high confluence reversal zones. Why trade with Wecan Institutional Footprint Pro? Most retail indicators tell you where the price was. Wecan Institutional Footprint Pro tells you where the price is likely to react. Stop guessing, know exactly where traps are set. It has a visual clarity, clean professional interface with fully customizable styles, a real-time intelligence, sophisticated alert system that notifies you a second an institutional level is tapped, including exact price and timestamps. It gives you alerts on the Telegram. So if you have a premium version of TradingView, you can set this alerts. Who is this for? Who can use this indicator? It's for option buyers. Use the trap levels to avoid false breakouts and catch high moment moves from the exit zones. Option sellers use these levels to identify safe or no trade zones and high probability reversal points, especially for the out of the money strikes. Scalpers, they can use the intermediate levels and a VWAP or CPR integration provided perfect 1 minute, 3 minute or 5 minute entries with the tight risk and reward. How to get access? This is a private and invite only indicator. We limit access to ensure the integrity of signaling levels for the community members. So you can send a direct message on WhatsApp to these numbers, and also you can contact us by calling us these numbers. take a screenshot of this number. Let me explain how the Wecan institutional footprint pro works in this demo. When we apply this indicator, it plots the levels like this at 9:15 itself. That is when the market starts. Well in advance, it plots the entire the levels. Also, it provides you the previous footprints of the institutions, which is not been tapped yet. See, it shows you the 9th December, the bull exit for the 9th December, the bull exit level was this. Till that level, the market didn't went here. And even the 10th December bull exit, it didn't went. Today, this is. So it shows like these are the levels still, it's not been tapped. So this level shows the institution's footprint. So what is this about? Like the call trap, the bull exit, put trap, and bear exit. So let us understand what is this. First we'll check the call trap, or else you can name it as a bull trap. What it is? A level above the opening price where the market looks extremely bullish. What as a retail traders do, they see a breakout and rush to buy calls. In reality, institutions use this surge in buying pressure to sell their own heavy positions. The market often reverses from this level sharply. What is your edge? You don't buy the breakout at this level, you wait for a reversal setup. The bull exit is also a mathematically, it's an exhaustion push point for a bullish move. In reality, is where the smart money that bought at the bottom plans to take their profit. If somebody is taking a trade here, the smart money, this is the level for that day. Okay, it's all this plotting is happening for the particular day. It gives the range dynamically. It calculates the range, and within that range, it is not being tapped. So that will be taken as a history. Okay, as a footprint history. At any one of the day, this level will be tapped. So these are the footprints for this day. The smart money is plays the exit profit portion is this. If the market couldn't reach this portion at any of the day, it comes to this level. The next is similar way, the bear trap. The bear trap is a level below the opening price where the market looks like it is crashing. Okay, retailers rush to buy. Okay, when a market is falling like this, they think like it is with this breakout wheel as a put uh, seller will enter. So in reality, the big players use the panic selling to accumulate a buy at discount. So this is the where uh, they buy. Okay, the people will get panic and they short the positions. Here they'll buy. The edges, instead of panicking, you look for a V shape. That is, you look for a reversal setup and you go for the trade. Same way, the bear exit is the maximum exhaustion point for a bearish move based on the daily volatility sigma. In reality, the institutions covering their short positions. So your edge should be, this is where you stop trailing your puts and exit the trade. So let me take a play a replay. As per the SEBI rule, I can't show the current data. So at least we should show to the public it is 3 months old data. We can show how our indicator works. So already I am in 11th, 10th day is completed. This is the levels for the 10th day. This level is the bear exit, and this level is your bull trap. So which is already tapped, means this level is already tapped. When it get tapped, you can see this line gets vanished. Okay, it doesn't it is like how you see, like when you read a message, read and unread, same similar way, it is already tapped. Okay, the levels is already tapped, and these are all the levels till it's untapped. Okay, untapped means this, the market price didn't reach to this level. The same way on the above side, the 10th December, 9th December, okay, the trap position is still is untapped. So let me start. So now on 11th, the 9 o'clock itself, it's plotting for the 11th December. So 11th December bear exit, 11th December put trap, 11th December call trap, and 11th December bull exit, along with the previous, the places like where the footprint is not yet been tapped. It's all plotted and it is visible for you to trade. So no need to panic. We see when we get to this level, so we can go for put side. See, this is the move we can capture. So from this to this level we can capture. Let me play with 1x. So let me show you. So we have along with this, we have a VWAP as an additional, what we call the confirmation tool, and we have the CPR. So normally the CPR, the open price, all will act as a magnet. Whenever the market goes away from the open price, it again comes back here. So these are all the intermediate levels where the option, those who are doing scalp trading can use these levels to capture the trades. So every point, like the one it's below the open price, acts as a support, and these are all becomes a buying zone. And one above the open price, these are all called resistance levels, intermediate levels, and these all can be used for as a sell zone. So whenever it goes up, that is sell on rise. Whenever it rises up, you please sell it. Whenever it is coming down, buy on dip. So this can be used in that scenario. So every day it marks the daily range, and dynamically it marks the daily range, and it reacts based on that. So now see 10th, we are in 12th. So it went and tapped the 10th bull exit, which was not tapped uh, when we started the market. So it went to that level. So we know when a market direction is changing, so we can use the VWAP as one of the confirmations where we can take a trade. We can enter this trade from here and you can capture this point, because we know well in advance the levels, because these are the footprints of the big players. So they move the market to the, who's the market movers? It's the big institutions and the operators or the market movers. So the basically it is this indicator helps both the option seller as well as the option buyer. For especially for the option buyer, we can take the footsteps, follow the footsteps of the big players like the whales and the sharks. So every day you see, like it marks the levels on the first candle. Even if you put it in 15 second also, you will get this get plotted, and this range it not exceed below this, above this level. Sometimes if it is breaking this, means definitely you have the second level in place. So when it is here and we have nearby the one which is not tapped, 15th December, okay, or else 9th December, in 15th December above this you are seeing the open price, then we can wait for this level to look for a reversal setup, because Open price acts as a magnet. See, this will be previous week's open. So the market is away from the previous week open. Definitely it comes to this level. So this is the place where we can look for a short position. So these are all the zones. So when you have your 12th, 15th December bull exit zone here, above that we have two more levels. Let us wait uh, for these levels, or else you see like it is whenever you get a reversal chance below this points, if it is crossing above, and wait for this on the same day. If that day is finished, then wait for the next day. Like in next day we get a new levels along with our previous untapped levels. So if you see on 14th again, uh, on 16th you have the 16 put. Before that we have 12th ka put is also there. Definitely it may tap this location, because now the market is in bearish direction, and you have the CPR also, it's above. Normally when it is away from the CPR, it may go back to the CPR open price. So you have a clear visibility how you can take your trades. So you will not make any mistakes, or else you don't enter into a false breakout side. So the indicator guides you like it is for the option buyers, especially for the option sellers, those who are doing future selling or future buying. They can capture these moves. The moves is not a small one. These move is okay, it's nearly 100 points, because the range is only 198 points, so we can capture this. In option buyer means there is a chance of a premium decay. Okay, so if you are using a correct delta strike price, if it is a 60 delta, so at least you can have a 60% move. That is, when it is moving 100 means you will have a 60-point move in the options if you're selecting the correct strike price. So this indicator works on the option chart also, but our underline will be the spot chart. When the spot chart reaches this level, so we should either exit from the C. So now you short this from here, you can exit at this positions. As we mentioned, that is, this is the place where um, they trap you. Okay, if it is breaking this level, the next level is this. So on that day, it just came to this level. It didn't tap this levels, and this level will become an untapped zone for the next day trading along with the new levels. So this indicator is actually a good tool for all the traders. Okay, especially the option buyers can take the footpaths of the big institutions, okay, and travel along with them. It's like a small fish on top. It's sailing on top of a whale. So institutions are termed in the stock market as a whale. So instead of going in front of the whale, you can travel along with them on their back. Hope this demo session is helpful. So those who want to offer this indicator, it is, you can DM directly to us. It is mentioned in our video, so you can contact us, and this will be invite only, and it is a subscription base. Thanks for watching, and again we'll soon with one more new series of indicators. Thank you very much.